Ladies and gentlemen, good day and welcome to Sunteck Realty's earnings conference call for Q2 and H1 FY26. We have with us today Mr. Kamal Ketan, the Chairman and Managing Director of the company, Mr. Prashant Chaubey, the Chief Financial Officer, and Mr. Abhishek Shukla, the Vice President of Strategy and Investor Relations. Please note this call will be for 30 minutes and for the duration of this conference call. All participant lines will be in a listen-only mode. This conference call is being recorded and the transcript for the same may be put on the company's website. After the management discussion, there will be an opportunity for you to ask questions. There will be Q&A session and we request to restrict questions to 2 per participant. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Before I hand the conference over to the management, I would like to remind you that certain statements made during the course of this call may not be based on historical information or facts and may be forward-looking statements, including those related to business statements, plans and strategies of the company, its future financial condition and growth prospect. These forward-looking statements are based on expectation and projection and may involve a number of risks and uncertainties and other factors that could cause actual results, opportunities and growth potential to differ materially from those suggested by such statements. I would like to turn the conference over to Mr. Ketan, the Chairman and Managing Director of the company. Thank you and over to you, sir.
A very good afternoon and happy Diwali to everyone, and thank you for joining us today. I would like to take you through the key development for this period. We achieved yet another good pre-sales performance of rupees 7 billion in Q2 of FY26, representing a year-on-year growth of 34%. On a half-yearly basis, our pre-sales has strongly grown by 32% to nearly rupees 14 billion. The growth in pre-sales was driven by a project both in uber luxury and premium luxury segment. We are confident of achieving similar growth for the full year of FY26. Now on the cash flow front, we have generated a strong net operating cash flow surplus of rupees 2.6 billion in first half of FY26, a growth of 35% year on year. This has enabled us to maintain our net debt equity at negligible levels of 0.04x despite the strong investments in business development. We have invested rupees 4.3 billion in first half of the year in business development compared to 1.8 billion for the full year of FY25. This demonstrates that we are committed towards expanding our development portfolio. In the first half, we have added 2 projects in the western suburbs of MMR. The first one is large redevelopment project at Andheri near Western Express Highway with a GDV value of rupees 11 billion, and second one in joint development at Mira Road on Western Express Highway with GDV of rupees 12 billion. Now I would like to share about our latest buy invite only a real estate lifestyle brand, Imans. Imans is a new word actually authored by Sunteck that unites magnitude and magnificence and immensity with indulgence. Through this brand, Sunteck aims to take the luxury living to the next level and sets new benchmarks that the Indian real estate market has never seen. The inaugural portfolio under the Imans includes our marquee project of Nepean Sea Road, which will be the most luxury and the exclusive residential development of the country. Now last but not the least, on the sustainability front, the company has been awarded coveted 5-star rating by Global Real Estate Sustainability Benchmark, GRESB, with an outstanding score of 99 out of 100 in 2025. A significant 3-point improvement over the previous year, highlighting the company's strong focus on environment, social, and governance excellence. I shall now hand over the mic to Prashant Chaubey to take you through the financial performance of Q2 and H1 FY26.
Thank you, sir. Good afternoon, everyone. I trust you had the opportunity to go through our latest results and the investor presentation, which are published on our company website and the stock exchanges. I would like to take this opportunity to share a brief update on financial and operational performance of Q2 and first half of FY26. The key details are as follows. We sold rupees 702 crores worth of area in Q2 FY26, which is a 34% growth over Q2 FY25 of rupees 524 crores. During the first half of FY26, we booked pre-sales of rupees 1,359 crores, registering a growth of 32% over H1 of FY25. Collections for Q2 FY26 stood at rupees 331 crores, which is a 24% growth over Q2 of FY25. While for the first half, FY26 collections stood at rupees 682 crores, a growth of 12% over H1 FY25. The strong collections have resulted in a net operating cash flow surplus of rupees 258 crores, which is a 35% growth over H1 of FY25. On the profit and loss front, operating revenue stood at rupees 252 crores for Q2 of FY26 as against rupees 169 crores in the same period last financial year. EBITDA stood strong at rupees 78 crores in Q2 of FY26, 108% growth over Q2 of FY25 EBITDA of rupees 37 crores. EBITDA margin stood at 31%, up by 8.73% on year-on-year basis. We reported net profit of rupees 49 crores, which is a 41% growth over Q2 FY25 net profit of 35 crores. Net profit margin stood at 19%. On half-yearly basis, operating revenue stood at rupees 441 crores as against rupees 485 crores in the same period last financial year. EBITDA stood strong at rupees 126 crores, 83% growth over H1 of FY25. EBITDA margin stood at 28%, which is up by 1,433 basis points on year-on-year basis. We reported a net profit of rupees 82 crores, which is a 44% growth over H1 FY25. Net profit margin stood at 19%. Net debt to equity stood at 0.04x. Thank you. With this, we open the floor for questions.
Thank you very much. We will begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question comes from the line of Pritesh Seth with Axis Capital. Please go ahead.
Yeah, thanks for the opportunity. Firstly, Diwali wishes to everyone at Sunteck and their respective families. My first question is on, I think we are seeing a very steady scale up in terms of pre-sales over last quite a few quarters. So congrats for that. Question is on the collections. I know we were facing some challenges in terms of execution and all, but what would be the exact timeline of improvement in collections going ahead? Will we see the scale up this year onwards, or probably sometime next year is when we expect? That's my first question.
Hi Pritesh. Pritesh, we have registered a growth of 24% in quarter two FY26 on a year-on-year basis. And as we progress with deliveries of our projects, we continue to build on the momentum. Moreover, all our projects are construction linked and we book the collections accordingly for all our ongoing projects. From our ongoing and completed projects, our collection efficiency for the first half of FY26 stands at 80%.
So, Pritesh, collections, you will definitely obviously see further improvement as the new projects, like the many pre-sales are coming from the Nepean Sea Road. So we all know that, and from the luxury. So it will catch up for sure. And you may start seeing that catch up in maybe the last Q4 of this financial year and definitely in the next financial year for sure.
Sure. So launch of Nepean Sea officially would be Q4 of this year or Q1 next year?
So if you see, we are already doing the sales for the existing customers and all, and we have done the substantial sales there. So official launch, yeah, we are looking definitely Q4.
Sure. Just on the second one, we did 500 crore of pref issue recently, and we have seen our BD activity also going up since last, I would say, couple of quarters and even more. How should one think about it going ahead? Whether this capital that we have raised would largely be utilized for unlocking the existing business development that we have done, or if we would continue to look for new projects as well. Yeah.
So Pritesh, definitely, obviously, we don't want to definitely slow down our BD activity. But at the same time, we were seeing that there will be a lot of requirement of the funds, which will be required in Nepean Sea Road and Dubai, as well as commercial building of Fifth Avenue, plus the new business development. So we don't want to slow down our business development at any point of time because of the existing commitments. And so we wanted to be overcautious, and hence I think we did this, and that's how we will be liking to put our money going forward, including the new business development, which we are already aggressively looking at, some of the good new opportunities over and above the existing ones.
And just to follow up, in which segment you are eyeing to build further? Since we are now doing more of luxury, uber luxury, that's the segment we want to target, or eventually at the stage that we are in terms of cycle, we would also start looking at mid-income segment, which might probably a couple of years down the line start doing well. So your segment of interest?
Yeah, so we don't want to speculate too much. So that's why looking at the market, we see already a good demand like in the ODC already. So and most of the sales you are seeing is not only coming from uber luxury segment, but also the premium luxury. So we are looking in both this segment, definitely not in the aspirational luxury segment, but more into the premium luxury segment going forward than the uber luxury segment. But we want to be balanced in both the segment.
Got it. Very clear. That's it from my side, and all the best.
Thank you, Pritesh. Thanks a lot.
Thank you. The next question comes from the line of Saurabh Gilda with JM Financial. Please go ahead.
Hello. Diwali wishes to everyone, and congrats on a great set of numbers. So just wanted to take up the last question forward, and get more details on your strategy for commercial development. I understand you mentioned about construction for Nepean Sea and Dubai also, but given that these projects are largely high margin and can become self-funding after some initial capital infusion, but is there any now complete strategy to build up your commercial portfolio, and can you share any timeline, if any, for the Fifth Avenue specifically?
So Saurabh, happy Diwali to you as well. So if you see Fifth Avenue commercial, we are very clear that we want to start the construction of even Fifth Avenue commercial also, and we want to continue to build our commercial portfolio. But as you know, we are awaiting our approval for our Fifth Avenue residential. At the same time, we will be similar timelines. We'll get the approval for our commercial. So you will see the construction of both the starting Fifth Avenue residential as well as the Fifth Avenue commercial, both to be starting at the similar timeline. And that's how, and definitely we want to build the commercial portfolio more and more, and we are exploring that while we are doing our BD activities.
Sure, enough. Thank you. And just one more last question from my side. If you can highlight the launch pipeline for next next 2 quarters, which one can come first? I hope Fifth Avenue is the advanced stage of launches, but anything if you can highlight from a launch perspective for the next 2 quarters.
So yeah, Saurabh, so we definitely don't want to which one we will be able to. But Saurabh, can you mute yourself just if you don't mind, or someone? Saurabh, we don't want to commit which one will come first and which one will be second. But as you see, there are enough launches which are going to happen, plethora of launches, I would say, for Sunteck, which we are seeing. ODC, obviously, Fifth Avenue residential. Then when we are talking about the new redevelopment project which we have acquired, even that is in the advanced stage, in Andheri, Western Express Highway. Then we were looking to launch one tower in Mira Road, which is Sunteck Sky Park, 4th tower. And then Vasai, we are looking to launch 2 more towers. Again, Naigaon, we are looking to launch now since we are depleting the inventory there also. We want to launch one more phase in Naigaon as well. Plus, obviously, we know that Nepean Sea Road, although we are selling some apartments, but we are looking forward to launch that and increase the GDV value while we are doing BD activity to expand that portfolio. Plus, obviously, the launch of Dubai, which whenever it comes, even that we are looking at. So there are plethora of launches going forward, and we are looking forward for all these launches, for sure.
Okay.
Thank you.
Thank you so much.
Thank you. Thanks.
Thank you. Ladies and gentlemen, if you wish to ask a question, you may press star and 1. The next question comes from the line of Harsh Pata with MK Global. Please go ahead.
Yeah, hi sir. Thanks for the opportunity and congratulations on the strong quarter and unveiling of the Imans brand. So my first question is on the Imans brand itself. So what is the status of the construction at Nepean Sea? When do we expect to start the construction there, and when can we expect the Dubai launch?
Yeah. So, good afternoon, Harsh. So, in Nepean Sea, already started the demolition of the main building, which is Bhagyasara, the first phase of Nepean Sea Road. And so demolition is very, very at the advanced stage. We should complete the demolition in next 15 days to 1 month. And our approvals are at a very advanced stage. So we would look for those completion of approval and obviously thereafter RERA, and we'll be looking to launch that ASAP. Then when it comes to Dubai project, so just to give you one good news that obviously we have already taken a big office where we can do a sales pavilion as well as in Dubai, and we are already started setting up already that interiors and everything have started on that Dubai office and the sales pavilion. Designs of all the full project in Dubai has been totally finalized and as good as freezed. Approvals again to mention is in the advanced stage and looking forward to the launch ASAP. That's how it is, both the projects, Dubai and Nepean Sea Road.
That's encouraging to hear. And so right, like you mentioned, we have deployed 430 crores in the first half towards BD. So how much more deployment do we expect since we have also done the fundraise? So how much deployment there? And so our inventory GDV, which is currently at around 39,000 crores, where do we see that in FY26 and maybe in FY27?
So we have been always very clear that we will never, looking at the strong balance sheet, we will not stop our BD development activity anywhere looking due to any fund constraint for Sunteck. Sunteck has today the balance sheet strength is so strong, I think one of the strongest balance sheet in the industry. Reason we didn't wanted to even have a 0% hesitation while we do BD. Hence, we raised that 500 crore also as a pref. And that's the reason that we don't want to compromise on BD at all when we are, and we'll continue to pour money as and when we see a good opportunity coming with a Sunteck style where we have a good IRR and good ROI. We will continue to take good projects.
Sure. So, our GDV target, which is at 39,000 crore right now?
So we have always, you see, doubled almost the GDV in 3 to 4 years, and we will continue to do that.
Sure. And my last question on the pre-sales mix. So, how do we see the pre-sales mix evolving, in terms of the share of uber luxury, premium luxury, and aspirational, maybe over the next 2 to 3 years?
So it is
since we have this Napier. Yeah.
So if you see our GDV, if you see in the presentation also what we have uploaded on the website and everywhere, our GDV mix is very balanced. If you see, the uber luxury is now 38%, and premium luxury is close to 29%. And aspirational luxury is 34%. So we can look at some similar sales momentum as well when it comes to the split of sales. And that's how we want to be very balanced. We don't want to exactly time the market which you cannot predict really the market. Obviously, we would like to time it well, but it is very difficult to predict any market what it will be. So we want to be prepared in every 3 segment, and we will continue to maintain this. That's why we are confident of 35% growth in even our pre-sales and GDV as well.
Sure, sir. I think that answers my question. Thanks a lot for taking, and Diwali wishes to you and the entire team.
Thank you. Diwali wish to you as well. Thank you.
Thanks. Thank you, sir.
Thank you.
Thank you. Participants who wish to ask a question may press star and 1. Thank you. That was the last question for today. I now hand the conference over to the management for their closing comments.
Thank you all for taking the time out of your busy schedule to join us today for the call. In case if any of your queries have been left unanswered, please feel free to reach out to us. We truly value your continued support and look forward to strengthening this relationship. Lastly, once again, I would like to wish you all and your loved ones a very happy and a prosperous Diwali. Thank you. Thank you once again.
Thank you. On behalf of Sunteck Realty, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.